Good day, traders. Coach Alex here. You've heard about my 304 consecutive winning trades, all verified. Did you know, before that, I failed in business, went personally bankrupt, and suffered 49 straight months of trading losses? Three world-class coaches changed everything for me. And I'm going to show you exactly what they taught me. Watch this video. Good day, traders. This is Coach Alex. I want to give you an idea on how to enter a trade after you've had a substantial move, you've taken profits, and now you're waiting to get back into the trade. Part of the technique is to wait until the market stabilizes and goes into a sideways pattern, as exists right now. But before we do that, while we're watching and waiting, it's going to be a while. Markets usually move in a 27-minute cycle. I want to talk about stops. Our video was entitled How to Get Away with Not Using Stops. And some of my clients, typically every few months we get a couple, they don't use stops by themselves. You know how the stops are entered? By your broker. When NinjaTrader sees enough of a loss in your account, they close your account out. So you do trade with stops. My suggestion is try to beat the rush. Get involved and use a stop, okay? You have to use it. There's no one, unless you're an investor with a dividend stock, without leverage, that's when you could get away with it by just collecting dividends. All right, we're waiting for the market to retrace. As you could see by the 60-minute and 15-minute chart, we're in a big downtrend today, 800 points. Iran news again. So we let the market go sideways, as you could see. But what happens? Eventually, it's going to break in the direction of the trend. And if it doesn't, you don't want it. We've had our runner already. So how do we get another one? We wait for the break of support and resistance, as you can see these two lines. Once we break down through it, you can move to the next support, but now it gives us the green light not to go short at the market, which a lot of traders do, but wait for the retracement. Why? Because those who already went short and they see the break, they start taking profits. That profit taking is what produces the bump up. And usually it's between 30 and 70 points on average in a typical volatility environment. If you want to know more, log into our room because we update those retracement levels every day. There's the big retracement level called the swing magnitude factor and the tiny ones. So now we're waiting to establish a little bit of a rally, scale up, and then we get closer to resistance, and sure enough, that market's going to come down. And this is an 82% winner. You watch. Moving a little bit, and now it starts to come down. We're short, and we're going to add to it. And now when it breaks out, the third time, we add to the winner. That's our key. Now, watch the ticks. You'll see the ticks. We're waiting for them to start down while the price is still up, reaching resistance. And the ticks can't get above zero. Do you notice that? Here's your first move on the ticks. Now it's starting down. Price is staying there. So we're going to short some more right here. And as soon as ticks go back to zero, we'll try to short even more. And if we can get it, great. We'll watch the market decline. We're already at a profit. I would like to short a few more if it gets toward, but not above, the 121 upper resistance line. And again, we're using our ticks. As the ticks come up, we could add a few contracts. Here we go. I'm going to add at the 89 exponential. And now we've got 10 contracts short, a total. And that's all I'm going to do. Now, it's watch and wait. We keep our stop. And as it declines, we'll take 2 more off the board, actually pay for some of the costs, the expense of it. And only when we break through that lower level will we move the stop to break even and take more profits. The key, though, is using the stop. I can't control if the market's going to go down here, but I can control what I do if it doesn't work. If the market starts back up and takes out that high, I got to get out. I don't want Ninja Trader stopping me out. Here we go. I'm going to take 2 off right here. And now you see that 20 SMA? That's now hooking down and adding to the negative aspect of the market itself. You would think it has to go down, but it doesn't. I've seen 800-point declines disappear in a heartbeat. So take more off. We're telling people in the room. Now as it breaks, there's 2 more off. Very good. Now we're going to hopefully turn this thing into a runner. But at this point, we can't lose. We've locked in at least break even if the market starts back up. And as you can see, here is the best way to adjust the levels. This way we show everybody where the stop should be. And now I've taken 2 more off, another one off. I've got 2 left. Can't lose on this one. And that's where you want to be. But guess what? You can't get a runner if you keep blowing your accounts out. So on the small losses, get out. There's always another trade. You don't want Ninja Trader being your stop guru. And that's the key. I hope you guys get a lesson from this. 2 things. In the room, we're always showing you where our stops are. The closer to the stop, the less risk there is of entering the trade. That's what you want. The more the market seems to favor your trade, the momentum helps, but then your risk is bigger. There's a trade-off. Part of the game is watching the volume, and that's part of our secret. Could get stopped out on the trailer, and that's okay. If it breaks that, I'm going to take 1 off on the break. Now we have 1 left. This is a good runner. And now it just depends on how many contracts you have. You see, always move the stop. You can't control your targets. Nice to have these targets, but it doesn't mean anything. The market doesn't care about your targets. It only does what it wants to do, and you've got to respect that. Pretty soon I'm going to close this last one out. A couple of people are already flat. Good trade, everybody. And that's just one example of how we wait for a sideways market to redevelop into the trend. I'm going flat. I hope you liked this video. I hope you got something out of it. The main thing, again, is the importance of stops and not letting the broker take you out. Please like us and subscribe to the videos. Hope you enjoyed the video. Now here's what I want you to do. Don't buy any courses yet. Come watch us trade live. No scripts, no hindsight charts, just real-time entries, targets, and risk. You can take a 1-week trial at eminiace.com. Watch us for a few days. See how we use the swing magnitude factor, the triple T, and the banker's flush in real market conditions. If you're impressed, and I believe you will be, then join us for a month. I will personally teach you all 3 of these record-breaking setups in one session. Practice them in a simulator. No risk. When you're ready, then trade for cash. Then, only when you're consistently hitting your profit goals, pay for the training. That's the goal. Not to make you dependent, to make you dangerous. Go to eminiace.com, take the trial. I'll see you in the room, and then I'll see you in the next video.